that. Let's bring back Warren Lovely, Chief Rate Strategist and Managing Director at National Bank Financial, who has been sitting with us through the press conference. And Warren, did you feel like you got more color on the thinking behind the bank's move in those comments today?
Yeah, I think the answer has to be yes. You can see the benefit of adding these press conferences to non-monetary policy report decisions. I mean, it used to be the case that we would have just had the statement and you would have been left to guess to some extent at the more subtle messaging that the bank was trying. You'd be reading between the lines. Now we have the governor, the senior deputy governor, answering pointed questions. Maybe not as clearly as some would like. I think what I heard was the two issues that they kept getting questioned on is, okay, you've started this interest rate easing cycle. Are you cutting again in July? How quickly are these cuts coming? I think the other big question, and John, I think you did a nice job pointing this out, is just how far ahead of the U.S. central bank can the Bank of Canada really get? We're ahead, clearly. We started at a lower level. We're cutting sooner. How much further ahead can they really get? And I think in both cases, the governor was careful to dodge or to avoid giving too much clarity.
It felt like he was trying to sort of change the way we think about that, because I guess I was asking him, and I was asking him because it comes up all the time with guests, which is when you see a weaker Canadian dollar versus the U.S. currency, do we end up importing inflation, especially if they're saying we're seeing progress on inflation and nobody wants to see inflation ramp up again, and all of a sudden we're back at square one. And he seemed to just imply, well, if the mechanics of the market result in the currency going where it goes because we're seeing progress on inflation and cutting rates as a result, so be it. That's the lens
how flexible
through which
exchange rates work, right? Yeah, I think as well, what I heard from the senior deputy governor was, I think, a pretty clear acknowledgement, and I tend to agree with this, is that, look, you set the monetary policy that is appropriate for the domestic economy. And we're at the stage now where there will be divergence in relative economic performance, Canada versus the U.S., so it might be appropriate to have divergence in monetary policy settings. One central bank cutting today, for example, a U.S. central bank cutting down the road. So I think, the senior deputy governor was careful to point that out, that, look, they want to set the monetary policy, the interest rate in Canada that is appropriate for Canada, and the exchange rate, John, as you point out, that's just how a flexible exchange rate system works.
Now, one of the other themes that came up a few times, and the Bank of Canada senior officials, they were somewhat delicate with how they sort of claimed responsibility for our housing market, but this has come up as well. The idea that now people across the country will see some headline around a pivot on rates. What does that mean for our housing market? I think sort of there's a general theory that there have been these people sitting on the sidelines. I'm not sure how many people are on the sidelines. We're even in the city of Toronto today, we saw a lot of homes are coming onto the market. A lot of homes have been sitting on the market for longer than previous. But this idea that people were waiting for the all clear on rates, they would come back in, that would spur housing prices, that would create housing inflation, et cetera, et cetera. They did address housing to a certain extent, but what responsibility do you think the Bank of Canada ultimately holds on that, and what did you make of anything they said on housing?
Yeah, well, I mean, this is a pivotal issue, and it requires a bit of a deft communications touch. I think what we can all agree on is that the Canadian economy is interest rate sensitive. We've got a big housing market. We've got a lot of household debt. A lot of that is mortgage debt. We know that monetary policy and interest rates work with a lag. So even though they're cutting today, we're still going to feel the pain from relatively higher interest rates all through the balance of this year, into next year, maybe even into 2026. So there's a lot to unpack there. I think, when it comes to housing, the other message I think the governor was trying to give right at the end there is, hey, let's not get ahead of ourselves. We're moving to lower interest rates. Additional interest rate cuts will probably be appropriate, but don't go expecting us to be driving interest rate policy to these abnormally low levels that existed before the crisis. So don't get ahead of yourself.
So I guess in our final thoughts with you, the comments you made after we got the announcement today were that you did anticipate more rate cuts this year. After hearing that additional commentary from the bank governor, has it changed your thinking on the path for rate moves for 2024?
Look, I think we should probably expect at least, let's say, 2 more interest rate cuts this year. The precise timing, I think the governor and the senior deputy governor are telling us, will depend on the data. And we're going to get a lot of data. Friday jobs data, we'll get a couple of inflation reports before the July decision. Is a July interest rate cut possible? Yeah, if the data continue to cooperate, if they're encouraged enough, particularly on inflation and the outlook for future inflation. So I think we should expect a couple more interest rate cuts this year, but this isn't rapid fire interest rate relief. I think, again, that's the message the Bank of Canada is trying to deliver.